All right, guys, welcome back to the channel. This is going to be the weekly analysis video where I go into what I will be expecting for the upcoming trading week based on current trends, based on past performance, and just to give you an idea of how I will be trading for the next 5 days. So before we begin, let's just pray. God, we just give you thanks again for all your blessings and for the opportunity to trade. I pray that you'll be with anyone watching this video. May it be informative, may it be inspirational, and may we all succeed together and help us to have a blessed and prosperous and profitable trading week. We pray in Jesus' name. Amen. All right, guys. Those of you who are new to the channel, um, I would advise you to go back and watch some of my previous videos on how to do certain things, how I set up the charts, how I um, use the information that's presented to me on TradingView in order to come up with my current bias. For those of you who may not know, I am 100% bullish on the NASDAQ 100, which means I buy from my largest higher low and I exit on my largest high until the market continues to make another all-time high. That does not say that sells do not exist. I just choose not to take them. They're not my preferred move. I do take some sells sometimes, but that's not my bias. Okay. And so, again, I am a big proponent of buying the dip. So you wait for the market to retrace, make a higher low, and then you buy from that point to your largest higher high or your largest high. All right. So let's just do this. You will know, those of you who have been following me will know how I mark my charts up. Blue lines are my weekly boundaries. Green lines are my daily boundaries. Okay. What we saw here last week was on Friday, not Friday, but the Friday before, we had that huge drop. It's not a breaking structure. It's still definitely maintaining structure because it only produced a higher low on the daily time frame. Okay. Now, fast forward to this previous week that ended yesterday. What you saw price did was for the entire week, it just consolidated between the last 2 points that were made the previous Friday. So you had a week of consolidation. Now, I normally say to you, Mondays, Tuesdays, and sometimes Wednesdays are the days that the market takes to retrace, consolidate, display bouts of volatility before doing the major move of the week. This week was a little different. Depends on how you look at it. It's still consolidated Monday, Tuesday, and also Wednesday, but you had huge bouts of those consolidation moves. So you had your highs, your lows, you're still able to get very good trades within those consolidation ranges. The important thing, and I mentioned it on some of the commentary that I made on my social media platforms and also on my Telegram, where I said to you that most people, what they'll do during consolidation times is that they mistake consolidation for reversal. So instead of trading higher lows to the largest highs, what they do is that they try to trade lower highs to lower lows, but the market does not make lower lows. It still makes only higher lows. So remember, consolidation just means instead of the market making higher lows to higher highs for a buy or lower highs to lower lows for a sell, what the market does is that it makes higher lows, lower highs, higher lows, lower highs. So it consolidates within those ranges. Because remember, in order for this market, now let's just look at what's currently happening. Let me go on a 1 hour time frame. In order for this market to start making true higher highs, okay, what it would have to do is that it would have to break the previous all-time high for it to be a true higher high. Okay. Now I know that when you're looking at the 1 hour here, you may be saying, well, didn't it make a higher high last week? technically, yes, it did make a higher high last week on the 1 hour time frame. However, when you look at your larger time frames, that higher high was only a lower high on your larger time frames. Okay, in order for you to get lower lows, it simply means that the price would have to fall lower than the previous new low, which means the price would have to be below this trend line here. It have to be this below this level right here that was formed last week. Okay, now when you look at a market like this, for example, you notice there are no lower lows. Okay, you have a new low, but it's actually a higher low on your larger time frames. All right, so let's look at this. This was the higher high that was made, and I'm going to mark it just so you can see it. So let's put a mark right there, and let's put a mark right there for the low. Okay. All right. So if you look at your higher high, go to a bigger time frame, let's say like the 4 hour. That's a lower high. So remember, although it's a higher high on the 1 hour, it's a lower high on the bigger time frame. Okay, let's look at the higher lows. This was a new low on the 1 hour time frame. However, when you look at your 4 hour, again, this is only a higher low. So this shows you right here, this is the consolidation between the last high and the last low. Okay, so that is definitely what you're looking at. That's definitely what the market did last week. Okay, the larger time frames, the bigger the time frame is, the more clearly you're able to see what the market did on that particular time frame. The smaller time frame you go, the more noise you'll see. So for example, if you go on your 1 hour time frame, you'll see a lot more points, a lot more highs, lows, some cases a higher high, and of course new lows. All of this. Now, of course, this was a trader's paradise last week. It was a trend trading paradise last week. Although it consolidated, there were many opportunities for buys. Excuse me. For those of you who are selling and understood how to be selling in a market that's 100% bullish but consolidating, it was also an opportunity for you guys to pick up a lot of pips last week. Okay. If you go to a time frame like the 2 hour, it's actually a lot more mellow, a lot more cleaner setups. So of course, this would have been from Friday. This was a big 8,000 pip move right here. If you're into selling and you understand that the price is not going to break this previous low, this would be a nice opportunity for a sell. However, if you're a true trend trader, then when the market comes here, you take your profit, you get out. Easiest 8,000 pips you could have made in a while. Okay. Wait for the price to get back down, you get back in, not a buy. Price gets up here, you take your profit, get out, you wait. Price comes back here, another buy. Take your profit, wait. Price comes back down. What do we expect? Well, price buying, here we go again. So the price is still consolidating, moving into next week. So all of these moves right here, all right, are showing you that the price just consolidated between the last high and the last low of the previous week. All right. Now, what am I expecting for this week? Well, let's take a look at it. So if you notice, again, weekly boundaries, daily boundaries. Okay. Price finished on Friday at a lower high. Okay. So if you took your buy right here, all right, took your buy right here on Friday morning early, you ended with a lower high. That was still over 5,000 pips for you to actually get, what you're looking for the week. Okay. So that's more than enough. So you should not be in any trades at all coming the beginning of the market. There is no way possible that you should be in any trades right now, unless you are selling and you are selling the retracement. Remember, any sales that the NASDAQ makes is only a temporary retracement to make the next higher low on your larger time frames. So you should not be in any buys right now, because the market clearly bought from this low, which is a higher low on the larger time frame, came up, it made only another lower high at the end of the week. Why is that significant? The end of the week, that's the end of the weekly candle, the end of the daily candle, the end of the 4-hour candle. Any candle below the weekly, that's going to be the end of those candles. So you should not be in any trades moving into next week. Should not be in any buys, I should say, because you're going to have a retracement. Right? That's what I'm expecting. Any new buys that I'm going to be taking, I cannot buy from a high. If I'm going in on a time frame, and let's look at that real quick. If I'm going in on, let's say, my 1-hour time frame, okay? If I look at my 1-hour time frame, the price clearly says that it's at a lower high. I cannot buy from a high position. I have to wait for the price to retrace, and then I go in for the next buy. Okay, if you buy here, you are going to suffer a retracement at some point in time. Okay, and if you suffer the retracement, that simply means that you should have waited for the price to actually get back before actually buying again. All right, so that is what I'm looking at for this week. Profits already secured on Friday. Okay, you're waiting for the price to come back to retrace before buying again. All right. So another thing that we can actually use to kind of gauge exactly what's going on in the market, those of you who are buying or selling, remember to always use your fibs. Your fibs do not lie. Your fibs do not lie. Now, remember also that if the market is going to retrace, okay, remember that on a smaller time frames, it is common for you to see lower highs, lower lows, because those time frames will have to break structure in order for the larger time frames to create a higher low. Okay, so let's look at it in, for what it's worth. Well, right here we see last week that the market actually broke structure on the 1 hour, the 2 hour, and the 3 hour time frames. Okay, market broke structure. Why do I say the market broke structure? Okay, on those time frames, because each time you see the word new low or new high, it signifies a break in structure. Okay, so price came here, it simply means that it broke and it made a new low in comparison to the last low. Now, how does that relate to anything? Well, for starters, this new low is actually higher than the previous new low. So in essence, it's a higher low. In order to make that make sense, always go up one time frame. So you go up to your 4 hour. That new low that we saw on the 3 hour, the 2 hour, and the 1 hour only registered as a higher low on your larger time frames. Okay. Now, let's look at everything in perspective. So if you go back to your 1 hour time frame, okay, remember, in order for a structure to be confirmed, okay, you first have to have a new low, okay, which signals, okay, fine, I want to go down, okay. But in order for you to go down, you have to get a confirmation. So a new low shows intent. This is where the market wants to go. This time frame wants to go lower. Well, there are two other things that need to happen. First, the market needs to come up and make a lower high, okay? Which means it's now a lower high in relation to the last high that it made, okay? So you have first the break, which is the new low. Then you have the lower high, okay, which is a retest lower than the previous high, all right? And then in order for the trend to be confirmed, you now need to have a lower low, which means the price needs to come back and break this level right here. Okay, then you have what is known as a confirmed shift in structure, confirmed break in structure for a lower high to lower low. Now, to be clear, I want to be absolutely clear, A breaking structure on the 1 hour does not necessarily mean that the entire market is going to be bearish. All it simply means is that the time frames that are affected, whether it is your 1 hour, your 2 hour, or your 3 hour, those time frames are currently in a bearish trend in order to fulfill the largest higher lows. Now let's look at that for a minute. So we're right now on the 1 hour. So the 1 hour, the 2 hour, and the 3 hour, they all say the same thing. They made a new low. Okay. Now we're looking to see if that's going to continue. All right. Here's the point that I made right here. How does that translate to your larger time frames? Well, let's look at 11-hour time frame, for example. There you go. That's a higher low. Okay. Remember, we already know that this low that was created here on Friday, that low that was created there on Friday, is actually, in fact, the higher low that was created on the daily time frame. Let me see if I can move. Yeah. All right. So let's look at the daily time frame, for example. The daily time frame, this was the higher low that was created the Friday before. So all of that selling that happened on the Friday before only shows you that it was a higher low that was created. Okay. Fast forward to this week. During that consolidation that happened, all of last week, okay, the low that was created on the largest time frame, which was the 3 hour, only created a higher low on your 11-hour time frame. See? So you have one low, that's a new low that was created, which means if you have a new low, you need a confirmation, which is a lower high. Then to come back down to make a lower low, it would have to break this level. What we saw last week was that you had the first confirmation, and instead of coming down to make a lower low, you had another rejection here on Friday. Okay? So which means instead of getting a lower low, you only got a higher low. So you're expecting that this price is going to continue going up towards the upside to make a new high, okay, which in essence will be a lower high on another larger time frame. I know it's a little bit confusing, but you got to understand it. And that's one of the reasons why I say it's not just simply watching a few videos to get this concept. It requires years and months of testing, back testing to understand what's going on with the concept. All right. So we're not on the 11th hour. This is just to show you what's going on in the bigger scheme of things. Whenever you see those breaking structures on your smaller time frames, always zoom out and look at your larger time frame to understand how it plays into the large picture. So let's jump back to the 1 hour. So here we go. The 1 hour ended with a lower high, which means you got a rejection here on the last candle of the day, last candle of the week. Okay, the same rejection is evident here on the 2 hour. On the 3 hour, there's nothing that is registered. Okay, so you didn't have a lower high, but the last thing you had was a new low, which means the price right now is showing intent on these 3 time frames to continue in a downward fashion. Doesn't affect the larger time frame, because the only time your larger time frame is going to get affected again is with a break of this previous low that was created on a week before. So I hope we understand what's going on. Okay, new low was signaled on Friday, which means, you need that confirmation to show the lower high, and then you need another confirmation to show the break below here to show that the market wants to continue in that bearish structure. Okay, let me give you another example. Let's look at the largest time frame that made a new low would have been the H23 time frame last week, Friday. So you had a higher high to low, which means you need a lower high and then a break of this low to show that the market is continuing down. We didn't get that last week. What we got last week instead was consolidations every single day. And you did not even get a lower high. Okay? So that's important. The market is in a heightened state of consolidation and volatility. And a lot of people lost their accounts last week because they didn't trade it correctly. Okay? Back to your 1 hour time frames. All right. So now that we're here and we see that the market has finished here on Friday, okay, the next move I'm expecting to see whether or not the market is going to continue is a break of this previous low that was created on Friday. That will tell me that this market, okay, is more seriously intent on going down, continuing going to go down on the 1 hour, 2 on the 3 hour time frames. All right. However, if the price does not come back and break this previous low on any of these two time frames, the 1 or the 2 hour time frame, then I know I'm faced with continued consolidation. Because remember, anytime you see lower highs or higher lows, right, following each other, higher low, lower high, higher low, lower high, that just means that the price is consolidating between the previous high and the low. So looking at your 1 hour time frame or your 2 hour, this was the last high, this was the last low, this was the breaking structure. Okay. Then you had the first leg of the confirmation. Okay. If you get a lower low, that means the price wants to continue to go down. Okay. How far down still remains to be seen. Because remember, you're still trading in the range of last Friday's high and last Friday's low. So until you get a clean break of 2 Fridays ago, the price is still consolidating within this zone. I'm spending a lot of time on this because I want you guys to actually get it. Okay. You have to be able to look at each week in isolation. And that's one of the reasons why I started trading like this, where I mark every single week, because I want to be able to see what the market does on a week by week, on a day by day basis. It's easier for me to actually spot trends. It's easier for me to see what the market is doing on a week by week basis, and I'm able to analyze more cleanly. So remember, this zone here, this entire zone, and let me actually mark this. Let me put this in a shaded area so we can understand what's going on. So if I go here and I get my rectangular tool, and I go here and I go here, this is where the price traded the week before. This was the zone, believe it or not, for the previous week. Let me change the color on this. Let's do red. Okay, fine. This was the zone. This was the zone from the week before. Okay. This was the highest point of the week. This was the lowest point of the week. Okay. Now, last week, okay, the zone for last week would have been from here. This is going to be a highest point on to your lowest point. Okay, let me just put that in a different color just so you can see, put it in orange. Okay, so you see what I'm saying? All of this current week happened within this zone. So it consolidated between the last high and the last low. So there's no clean break in structure. There's no higher high that's been made. A higher high would have to be another all-time high, and a lower low would have to be lower than this point. So the market was not making higher lows or lower lows last week. All it did was that it made lower highs, higher lows to lower highs. That's all it did. Now it does not show it on the 1 hour time frame because you have to jump to your larger time frames to see how this played out. Okay, let's look at this. Let's go to like the 11-hour time frame. Okay, let me open that up. So remember I told you, here you go, lower highs, higher lows. Okay, so it happens. Everything happened within this range. This was your high, this was your low. You have your lower high and your higher lows within that point right there. Okay. So that is interesting to see what the market is actually doing. Okay. You go to another time frame, let's say the 21 hour. Okay. Notice nothing has even been registered. Go to a time frame like the 12 hour. Nothing else has been registered based on what we have seen from the previous week. So that's why I mentioned to you that the market actually clearly is consolidating between the last 2 points. Now, going back again to your 1 hour time frame. All right. So I'm just going to take these off. I just had them there to show you what I mentioned to you about the higher lows and the lower highs. And me being able to do this has helped me tremendously to be able to spot patterns, spot trends, and to be able to make adjustments based on what the market is doing. Okay. So when you come back here and you look at what's happening, all right, now one of two things can happen. This can actually sell, break this previous low, but if it still stays above this, you still have consolidation between that zone. Not until it breaks this cleanly can you say that you have a true trend, true new trend on your 1 hour or your 2 hour time frames. It has to literally break below here. So even if it comes here and it breaks and forms a lower low, and it's still higher than this, because remember, from this point, breaking this low, it's going to register a lower low. Okay, but it's going to be a lower low that's still higher than the previous low of the previous week. All right. Now here's the good stuff. If you haven't had a chance to review my video on the Fibonacci retracement, now would be a good time for you to actually go and search that video on the YouTube, and you'll be able to see exactly what I'm talking about. Now, always rely on your fibs. Your fibs, I can't stress how powerful that tool is. Okay. The NASDAQ 100 usually tends to retrace to the 61.8 or the 71.8 level. All right. So here's what you're going to do. You track your retracement. Can almost tell you this looks like about a 78 retracement, 71, 78 retracement. So we're going to apply our fibs. So we come here. We draw fibs from the last high to the last low. Let's put it over here. Okay. And here we go. Like I said, 78.6 retracement. All right, it's right within that region. Now, here is the interesting thing about all of this. If the price comes and goes to an extension, the first extension level, which is at 27%, it's still higher than this previous low if it does that. Now, a 21% retracement, so sorry, a minus 27% retracement is still going to put it in the region of this trend line. So even if it comes down and breaks this trend line, tips through it and everything, and does not break this level, okay, you're still at an expansion level, and that would make your fibs valid. Now, if it comes to this 27% line and rejects, right, then you know the price is actually going to shoot up again. Okay. Now, another thing that I want to point out to you, is as we look at these fibs right here, all right, if it comes to a 61% level, let's say, let me draw a line right here. Let's do a rough line. Where's my tool? Yeah. Let's do a rough line. Let's say it came to this point right here. Okay. Sorry, the line is not straight, but let's say it came to this point right here. Look at your larger time frame. Where are we now? Okay. So this line right here. So right now, you'd be at this low would actually expand, because remember, nothing has been recorded here. So this low would actually expand and come below here. Now, this would actually signal a new low here. On your 4-hour, it would actually signal a lower low. Now you'll be looking now at a breaking structure on your larger time frames, because now this would be a rejection here on Friday, and it would extend this higher low that was currently made. And if it broke this level, now you know this higher low would turn into a lower low. Okay, now if that happens, here's where we are. You'd be at a lower low on your 11-hour time frame. On your 12-hour time frame, this new low that was created would have been pushed, and you could see a deeper retracement. Okay, now I'm still not concerned about that for as it relates to the grand scheme of things on your larger time frames. Why? Because remember, if you look at your daily time frame, it's still at a higher low. In order for this move to be a breaking structure on your daily time frame, it would need to come down, and it would have to break this previous support line here. So you're looking at your 4-hour and your 1-hour support lines. All right, in order for this move to be validated. All right, so I'm still not concerned about that, because like I said, you should not be in any buys right now. The only move you're supposed to be in is if you're selling. And if you're selling, kudos to you. But if you're not selling and you're not buying, guess what you're doing? You're waiting. And the deeper the price goes, it's the more discount you get, and you're able to buy at a discounted rate towards going back to your all-time high, because the NASDAQ will always go back and break the all-time high. All right. So where we are, if price continues down, you should have to break this level. It have to break all of these levels. Now you're at the daily time frame. If you go on the weekly time frame, look at what you have. Let's take all of these out so you can see. In order for the weekly to now break to be in a bearish mode, the price would have to go all the way back down to, I think, 10,427 or something like that. Let's see, on the weekly, I'm sorry. On the weekly, we'd have to break 16,335.1 in order for the weekly to be considered bearish. You'd have to come all the way back down here to break that. Anything outside of that, it's still a higher low. So your daily would have to continue to break this first higher low right here, which it can do, because you see this wick right here that's untested. It can do, but guess what? Again, like I said, once you buy from your largest higher low, you have nothing to worry about. Because if the market makes a higher low and goes up to make a lower high, guess what? You take your profits and you wait. So based on last week, all right, if you look at last week, and put your lines back. If you look at last week, Friday, this was the perfect opportunity. Let me move this out of the way. Yeah, on Friday, this was the perfect opportunity for you to actually take your profit. You should not even be in a buy right now at this point in time. You should have taken your profits here, because you entered here on your higher low, taking your profits here, and have a great weekend. So if you are in a buy and you're worried, is the price going to continue up? Okay, guess what? It will. However, you should have taken your profits here, because it's a lower high. And remember, the concept is you buy low and you take your profits at your all-time high, your higher high, or your largest high. In this case, your largest high would have been your 3-hour time frame. Sorry, your 2-hour time frame at this point in time would have been your largest high. Okay? So you'd have taken your profits right here, and you would have been waiting for this new candle, this new weekly candle to start. okay? And then you're waiting on your larger, higher lows to be able to take your trades again, resuming the trend buys, which is your largest higher lows, and exiting on your largest highs. All right. I really hope I'm making sense. You know, if you have a little struggle understanding the concept, please go back and review some of the previous videos. Excuse me, so you can see you can follow along, you can actually catch up with the trend. And like I said, you can always reach out to me, send me a message on Telegram or whatever it is, and I'll be more than happy to respond to you as as quickly as I can, as time allows. All right. So for this week, what am I expecting? Well, this week I'm expecting price to actually continue in a upwards movement. However, not before having support formed after retracement is made. So let me just jump quick here. There's a line that I actually had created on Friday based on a retracement point that I was looking. I just need to add it to this week's chart. So the price, going back to the 1-0, okay, price should actually come back in this region right here. This week right here that we saw on 1 p.m. on Friday, I'm expecting price to actually come back and break this week. If it breaks this week, you're looking at a 38% retracement. There's another week right here at 38%. Okay, price can take out. If it breaks 38%, then you're looking at anywhere from the 0% to the 27% as a retracement. All right. However, what you're modifying, what you're trading for, remember, you're not trading for your lows, you're trading for your highs. So anywhere your largest higher low comes in, that's where you need to be taking your trades. You need to be looking for your confirmations in order for you to go back in the other direction. All right. So let me take these lines off here so you can actually see the fibs. But let's go back here. Right now we're at 78%, just above 78%. All right. No clear break above the 78%. This was made at 3 p.m. No clear break above that. Failed to actually break this level again. That's one reason why I'm expecting price to retrace. Now, this right here is an important level because right here, this red and green candle shows that there's an area of support and resistance right here. Okay. Now, we're at 78%. Excuse me, 78% right here. Okay. If you measure this level right here, I'm thinking this region right here, this wick should be about 61%. Okay, which would be a fair area for price to come back before continuing on its upward trend. Now let's take a fib, and like I said, let your fibs be your friend. Okay, so we go here, we measure right here. Okay, there we go. This wick right in the 61% area. So right here is fair gap. Remember, every high, every low, every time frame, they communicate with each other, and you have to understand how they're communicating. Now, of course, remember, this is a low, it's not a high. However, it's a lower high. It's still one of the types of highs. 3 types of highs. You have a new high, you have a lower high, and you have a higher high. Lows, you got a new low, you got a higher low, and you have a lower low. Okay, those are the 3 types of lows. Let me see if I find one right here. All right, those are the only types of lows you'll ever see on one of these time frames. So let's look. Let's look at the 15-minute. I just want to show you what the different types of lows are. Okay, so here we go. You have a low, you have a higher low, and a lower low. Only 3 types of lows. 3 types of highs. They're going to be high, you're going to have a higher high right here. And then, of course, you have a lower high. Just those three types of highs, three types of lows. So going back on the 1 hour, okay, this is what you're looking at. Price got rejected right here, which means this is the current trend on this, sorry, the current zone on this particular time frame. It's not the highest of the week, but it's the lowest of the week. Okay, so it's the lowest point of the week, and it stopped at a lower high for the week. So this particular move right here, remember, every single high, every single low, they usually retrace around about the 61 to the 78% mark. So you just put your fibs on those levels. You should be able to see where the price is expected to go. Outside of the fibs, I already told you this is support and resistance because of this green, red, green candle. Right here is an area of support and resistance. We measured it by the fibs just for added confirmation. Right here, it shows that you're within the 61% area. So 50, 61% area. So anything from 38%, if the price pushes down, comes down, touches the 61% and wicks out, then you know that's a rejection and you know you're heading back to the stars. But again, I'm not buying until I get the retracement. How do I know where the retracement is going to go? I use my fibs. You have to get into the habit of pulling your fibs and looking at where those potential levels of retracement and retest are going to be. All right. So I know this video is a little bit long this week, but I just want to take some time to let you guys understand the importance of trading the trend. Even in consolidation markets like we saw last week, you still had great opportunities for gain and for profit. All you had to do was to trade the trend, which is take your higher lows, exit on your largest highs. Because once you take your higher low, you will be in profit. You will be in profit. Look, higher low went to a high. Higher low, which is a new low right here, it went up, it made a high. Higher low, again, same issue. Higher low or a new low, it went up, it made a lower high. So it didn't break. So every single low before broke a previous high. This one did not break a previous high, but it still gave you a lower high. It still gave you an opportunity to take your profits and exit from the trade. All right. So going into this week, I'm still 100% bullish, which means I'm buying every dip that comes as long as it's on my largest time frame, and get into the habit of using your larger time frames a lot more. Stop basing all your decisions on your 15-minute, the 5-minute, all those time frames. You use those time frames only to enter after you have had confirmation on your largest time frame that is making that higher low. So get into the habit of looking, starting from the right, looking left. So you start at your largest time frame and look towards your smaller time frames. You trust me, you're going to be 100% better for it. So in closing, I just want to say again, I'm buying my dips. Right now, I am not buying because the price ended at a lower high on my 2-hour time frame. And for me to actually get back into the market, I cannot enter from a high. I have to enter from a low point and buy to a high point. Take my profit. Wait for another low point, buy again. Last thing I'm going to do, just going to show this to you guys. Really, really simple. It's a simple concept, but it takes a lot of practice in order to be consistent. Do it on a 2-hour. So you buy from your low point. The ultimate is for another all-time high. If the market does not make an all-time high, it will make a lower high. So you take your profits right here. Once you take your profits right here, then I wait for the market to come down, give me another higher low, and then I repeat. Goes up, it makes a high, That's higher than the previous high. Take my profits, wait. Comes back down, it makes another higher low, go up. Take my profits, then I'm going to wait. Price comes back down, take another buy. I'm expecting that price is going to continue breaking the highs just like it's been doing all week. In the event that it doesn't do that, like we got on Friday, and you got only a lower high, take your profits. Next thing you do, you wait. It's real simple. Real simple. So I really hope that this has helped somebody to kind of understand a little bit more about the Auber strategy, more about how I trade, more about how I do my analysis. It's real simple. Remember, find one thing that works 100% of the time. Do that one thing 100% of the time, and you'll be guaranteed to be successful 100% of the time. All right. Take care, guys. Have a great week. God, we just thank you again for your blessings, for your goodness. We pray that you'll be with us as we trade this week. Help us to be successful. May we continue to earn profits, and may we continue to just improve on our process and what we do. We thank you and we love you. In Jesus' name, amen. All right, guys, take care. Enjoy your trading week, and I'll see you next time. Bye-bye.